Vanakkam, Namaskar, and hello to all the viewers and listeners of this edition of Fixed Income Markets with Sundaram Mutual Fund. As expected by us and markets, the Monetary Policy Committee held the repo rate at 6.5%, overlooking the spike in inflation, which according to them is due to one-off factors of vegetable inflation, although the tone of the policy sounded hawkish. In general, the MPC has decided to overlook the higher inflation as the prices of vegetables is expected to move down as new crop arrives. As a caveat, Governor Das has reiterated that if the price pressures persist, MPC will not hesitate to act on the rates. MPC minutes also shows concern on growth as the prices of vegetables remain a worry, and all the members are looking to exhibit patience. Dr. Patra believes that higher liquidity will fuel asset price inflation and favors a tighter liquidity for a better monetary transmission. On the other hand, Dr. Ashima Goyal thinks that supply side measures from government will help in easing current inflation, while Professor Dwijendra believes that couple of higher readings should not draw panic as couple of low readings are not a cause of celebration. Nonetheless, in the meantime, liquidity remains in focus, and as incremental CRR comes up for review on 8th of September 2023, we believe that even if it is reversed on account of festival season setting in and advanced tax outflows, chances of some form of liquidity control will always be live if liquidity in the system cause the overnight rate to hug the special deposit facility rate. On the domestic front, the macroeconomic data continues to be robust with PMI numbers in expansion zone. Services PMI is at multi-year high. GDP print in quarter 1 of FY24 at 7.8% has been in line with the market estimates and highest in the larger economies, showing the domestic orientation of Indian economy. Most other macroeconomic indicators continue to be robust. The external demand has been moderating as witnessed in the export numbers. The trade deficit in recent prints has been elevated as the domestic economy continues to remain robust and demand for inelastic imports continue. On the global front, United States continue to show resilience while Europe has been a mixed bag and China is facing deflationary challenges when every other economy has been fighting inflation. A lesson to be learned from China and Japan is that a very high level of consumer debt, especially linked to illiquid assets like property, can cause a sharp slowdown, which is difficult to fend as the new lending reduces and rates move down with banking system challenged with high NPAs and low loan growth, a perfect recipe for disaster. Probably the reason that People's Bank of China has been reluctant to cut rates meaningfully while looking to ease liquidity in the system. In this backdrop, we think that since the rate hike cycle is now almost over, which has been one of the sharpest rate rise cycles in decades, will percolate into the real economy and cause the economies to slow down sharper than what most professional forecasters are estimating. The possibility of rates remaining higher for longer can be there, as we may see the higher prices remain a problem despite a slowdown on account of the polarized global economy and preponderance of climatic events. Weather forecasters have been predicting a severe El Nino. With supply remaining a challenge, a floor on prices has been created which can keep the central banks on vigil. In this precarious situation, the rate cut cycle, when it begins, is likely to be a shallow one. Based on this, in continuation of our earlier stance, we recommend active mid-duration buckets as a preferred route of investments on account of better price discovery due to liquidity, which results in a better capture of the interest rate moves. Products which we have in our basket are Sundaram Short Term Fund, Sundaram Corporate Bond Fund, and Sundaram Banking PSU Fund. Keeping this in mind, we recommend investors to take positions in mid duration buckets if they have 12-month to 18-month horizon, and investors with conservative risk appetite match their investment horizon with duration of the product or take position in conservative products like liquid or overnight. Thanks for joining us in this episode. Looking forward to see you next month.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.